Guys, welcome to my channel. Good afternoon, good morning, good evening, wherever you're watching this video from in any part of the world. My name is Daramola and I talk finance, business, and investment. And so far in this channel, Mike Talk Finance, we have been discussing a lot of wonderful stuff. By the way, my full name is Daramola Michael Oladuni. Now, the channel name, the YouTube channel name is called Mike Talk Finance. So basically, we talk finance, business, and investment. I want you to be clear about this. Now, the YouTube channel is Mike Talk Finance. That's the YouTube channel. So we just talk about finance, business, and investment. And if you can see on the screen, it's FBI way, finance, business, and investment. That's just basically what we talk about. But my name is Daramola. Basically, that's the name I use. But you can call me Mike if you wish. And so far, we've been talking about um, the importance of understanding how to read financial statement. And this does not just matter because you want to invest in a business. I mean, personal finance, being an entrepreneur in a business, you want to know the financial health of your business because it's very important. So you don't invest or you don't be in a business and the business is sick, but you don't know that the business is actually very sick. But it's very, very possible because we have entrepreneurs who have actually, we have multinational companies that have actually gone bankrupt. Bear Streams and other great corporations like that have gone bankrupt because they are not able to meet their operations because of financial mismanagement. This is why it's very important. So it cuts across various segments of life. Personally, as a business owner, as an investor, you can invest in anything. I keep saying this and I stand to be corrected in this channel. You can invest in anything. You can invest in anything. You can invest in food. You can invest in makeup, cosmetics. You can invest in phone. But how is that investment performing? What is the benefit of that investment? Is it positively influencing you or negatively influencing you? So this is why you have to be very careful. I've invested in business that didn't turn out to be something very nice. I've invested in a car startup that actually got bankrupt and all of it. Sorry you can't see my face today. But please don't hesitate to like, share, and subscribe. I'm a very, very simple guy, but I'm down to the core when it comes to finance, business, and investment. I'm also learning, and I want you to subscribe if you're interested in learning about these stuffs. And trust me, we have a goal of reaching 100 subscribers. We are going to be get verified. We are going to get up to 1 million subscribers and even more. So I want you to be part of that family now. So go smash the like button, comment if you want to say something or ask a question, and I'll be right there to respond to you as fast as I can. So today we want to talk about the statement of cash flow. Remember, previous week we started with income statement. I tried to break it down to the best I can that every person can understand. Just coming to the channel, you can understand. I explain each of those terms or those contents in the income statement. I also went to talk about the balance sheets. We talk about the current asset, current liabilities, um, fixed asset and fixed liabilities. We explain all those in the balance sheet. And today we want to be talking about the statement of cash flow, or you can see it as cash flow statement. So what is cash flow? Let me pick up my pen. What is cash flow? Cash flow, I put it this way. Um, Cash flow is a song that is called Cash Flow. Cash flow, F O L FLOW, cash flow. Cash flow is just trying to tell us how money flows in and flows out of a business. So this is a business, for instance. This is a skyscraper, for instance. This is Damola's Incorporation. We do a lot of media advertising stuff. That's what we do. So this is my business. So this is cash, this is cash, this is cash, and only I also want to add naira and all of it. So this is cash flowing into the business, and this also cash flowing out of the business. Chinese yuan, Nigerian naira. So Cash flow is just a statement that analyzes how cash flows in and out of a business. That is cash flow. The more cash is coming in and the less cash is going out of the business, it will produce a positive cash flow. That is what every investor, every business owner wants to have. Every personal person, I mean, if that's correct, every person wants to have money coming in than going out, right? So the more money is going out than coming in, it's bad for the business because we'll have a cash flow, a negative cash flow, and that individual will be broke and will not have a lot of money. That's a very, very important point I want you to look at. Cash flow talks about how money comes in the business and how money goes out of the business. So we can have positive cash flow, we can also have a negative cash flow, a positive cash flow, and also a negative cash flow. So from the explanation I've given, I believe you want to have a positive cash flow rather than a negative cash flow. That's very important. So let's move into what the cash flow statement entails. I'll do that in my next slide. So the cash flow statement basically entails three segments: the cash flow from operations, the cash flow from operations, or some statement you can see it as operating activities, cash flow from investing activities, and cash flow from financing activities. So basically the operation of the business, how the business is operating, how the business is generally operating. That is the cash flow from operations. Now we have cash flow from investing. Investing can be investing in house, can be investing in cars. My handwriting can be investing in cars. I think I need to clean my pen. Okay, can be investing in cars or trucks, whatever, as long as it's used in the business. Can be in form of investing in intellectual properties, but it's an investing activity. So it's cash flow from investing, cash flow from operations, cash flow from investing activity. We also have cash flow from financing activities. Can be financing activities in terms of buying shares or selling out stocks. Let's say your company is a publicly traded company, so you sell your shares out, you bought shares, you buy dividend, derivatives, and all of it. I've explained all these terms in this channel, so you can do it to watch our previous video so you can be able to understand this terminology. So this is cash flow from cash flow from financing activity. So basically this is the three statement that is in the cash flow. This is the three statement that is basically in the cash flow. And if you really don't understand any aspect from it, please just highlight and just let me know in the comment section. I'm going to respond to it as fast as possible. So let's take a practical view of what this. I promise not to make this video very long. So let's make a practical. Let's look at a practical aspect of this. So this is Microsoft. We've been actually analyzing Microsoft Corporation, the financial statement for last year, 2020. Last week was we did balance sheet. So this week is the cash flow from is the cash flow rather. So like I said, the cash flow is divided into three segments. So basically this is it. I'll try my best not to use the pen. I'll try my best to use the pen as much as I can so we can all follow in details. But basically this is the cash flow from operations, cash flow from financing, then cash flow from investing. Let's look at how Microsoft cash flow is. So basically from the cash flow we have direct and indirect cash flow. But when you have the indirect cash flow, we have the net income The net income is what we have from our balance sheet. So I'll just try to scroll. Let's see income statement and let's look at it. So you can see the net income 44 billion 281. Now let's look at it now. 44 okay, yes, 44 billion 281. This is it. Where's my pen? Okay, so this is it here. 44 billion 281. So that's the net income. And of course, it's added to the cash flow from operations. Now, I want you to understand something. If it's added to the cash flow from operation, there are certain aspects in the cash flow from operations that is in the balance sheet and that is in the income statement. So if those things have been added in the balance sheet or added in the income statement, it will be very unfair, or it will be an inaccurate figure or an inaccurate number or an inaccurate financial information, because if we are coming back to be adding them in operations again, it means we are adding them twice. So certain things that have been added that is now reflecting in this 44,281 will not, or rather will be subtracted in the operations. Do you understand me? You get me? It will be subtracted in the operations. So let's just take a look at what we are trying to talk about. Okay, so let's do this way. Okay, so now we have net income like what we highlighted before. Now we have depreciation and amortization. Now if you go to the income statement, you see depreciation and amortization. It has been accounted for. In the income statement, I talked about how we make the calculation for depreciation and amortization. But I will give an explanation to the reason why we are going to add it rather than subtracting it, because it has been deducted from the income statement already, and it's a reflection from 44 to 81. This is what I mean practically. If we are going to add to wow, this is just too thick, sorry. Okay, wow, why is this thick? Second, please. Okay, let me use my pen now. Okay, so for example, this is it's for, let's assume x 2 for y, and I add it together, is called my net income. So the total of it is 4. That's the total of it. So net income is 4. Now I've come in now, and x and y is part of the things we need in our operation of our business. Now, if I'm adding my net income to operation, which is 4, I shouldn't be coming to add x and y, because if I'm adding it, it's giving a false figure. It's giving me 8, and this does not tally because what was recorded was 4. Do you understand me? So if I'm adding those figures back again, it will be double digits. It will be double figures. It will be a wrong reading. It will be a wrong accounting system. That will be fraudulent. So rather, this will be in bracket, this will be in bracket. So we are subtracting it because it has already been added in the net income. So what we have is 4. That's exactly what I'm trying to talk about. So I'll wipe my screen again. I'll continue from there. So we have depreciation and amortization. This is it here. It has been added. Stock-based compensation expense. Now, stock-based compensation expense is, you're a worker in Microsoft and you've performed phenomenally well, maybe as a board or part of the board of directors. They agree that if they can hit 15% increase in returns from previous year, which is 2019, we are going to give you 5% or 0.1% of the total shares of Microsoft Corporation. So that's a stock-based compensation. They are not actually giving physical cash out. They are only giving shares. So it's not as if monetary term is going out. So that's why it was not considered to be a deduction. So 5 million, 5 billion, 289 was actually the value of that stuff that was actually given. So net recognized gain on investment or derivatives. Net recognized gain on investment and derivatives. Look at the income statement. There's a part they mention other investment, and that has been added to the income statement. So we won't be adding it, so it will be a double figure if you add it. That's why it has been made for deductions here. Okay, so deferred income tax. Deferred income tax is tax that we're supposed to have paid, but we are deferring it. We are not paying it. So that money has not gone out to anywhere. You understand me? That money has not gone out because we have not yet paid it. You understand me? But remember, in the income statement, a space is made for deduction for income tax. A space is made for deduction of income tax. Remember, they will say income before tax, then tax, then income after tax. So there have already been made recommendation for taking income tax. Rather, income tax has been deducted already. So if it has been deducted, it means it has to be added here. Okay, so we have it as 11 million or 11 billion, I guess. I've not looked into the figure in detail, but this is 11 we have here. Now, changes in operation asset and liabilities. So account receivable, let me make my screen clear so you can see the stuff here. So account receivable. Account receivable is what we are expecting. Account receivable is recorded in the current asset aspect in the balance sheet. This money we are expecting from the people we supplied, our customers that are yet to pay us. So it's an asset. It has been recorded there as an asset. So it has been added. Definitely we have to deduct it from the operations, because if you're adding it, that will be a wrong digit, because we are adding double figures, whereas it has already been added already. So that's why we have it in brackets. So deductions has been made already. Now inventories. Inventories, it's also an asset. Now this can be quite complicating. The reason being is because I want you to look at to the right. Look at this place. You have it in comma, in bracket rather. And an indication is to tell you what has gone out and what has not gone out. You understand me? So it means that these have not been recorded as an asset. Sorry, in the balance sheet or in the income statement, a provision has been made where this has been deducted. We have not yet made the money out of this stuff. We have not yet made the money. We have spent on raw materials. We have not yet made the money. So this is recorded as is added because in that aspect it has been subtracted already. So we have this as 168. But in this aspect, that's 2018. In 2018, if you get me right, by the way, just ask me question if you're not clear about any aspect of the explanation so I can explain it to you. So in 2018, this has been added to the income statement, to the balance sheet. It has been added. So if you're coming to analyze for the operations, we won't be adding that number, because if you're adding the number, it will be getting double. I mean 2 plus 2, 4, instead of getting 2. That's what I'm trying to explain to you. So other current assets, I mean, this is also an asset. When something is added, it's an asset. It means it has been added. That's what it means. So if it has been added, it means here we are going to subtract it. So other long-term asset, it's going to be subtracted. Account payable. These are people that we are supposed to pay. These are people that are supposed to pay. In this aspect, it has actually been deducted there. So we are trying to add it here to account payable. Then on earned revenue, The same thing applies to it. Income taxes. Now you can be also confused here because taxes, we're supposed to pay tax. Okay, now there are some aspect of tax that we have not yet paid. Now, for 2020, as at the time this income statement or this financial information was released, this tax has not been paid. So you can see that at this point tax has been paid, at this point tax has been paid. So because of the COVID and all of it, so this was not actually, it has not yet been paid. So we have it to be deducted. So we don't have a wrong accounting reading. So other liabilities has been deducted, so it is added. Other long-term liabilities, it has been deducted. So in the cash flow statement, it is added. So if you add everything together, subtract with this net income, it will give you 66675. I don't want to bore you with calculations because I know I'm already boring you already. That's why finance is not something that you should kill yourself over. It doesn't take you an hour or 2 hours in a week to just make this analysis if you are interested in any business you want to look at. So you just look at these numbers and you are done for the week or for the month, and you go face things you're passionate about. But this is what I'm passionate about, so I can spend the whole day talking about this, right? So financing activities, remember we talk about in terms of stocks, shares, dividend, derivatives, and all of it. So repayment of short-term maturities, they don't have anything for that. So cash premium on debt exchange. Now debt exchange, then talk about bonds. So the company raises bonds. Sometimes you can sell your share, but when you're selling your share, selling your ownership out to the public. But when you're selling bond, you're not selling your ownership. You're just trying to get money out of the public with a promise of paying them back in the future with a stipulated interest rate. Now, this interest rate is greater than the normal interest rate you have in the economy. So this is what I mean. For instance, now, where's my pen? For instance, now we have, come on, pen, where are you? So for instance, now the interest rate for the United Kingdom where I'm in is let's say it's around 3%. For instance, the interest rate is around 3%. That's the interest rate. Now, the bond is offering an interest rate of about 4.5%. This is what I mean. So it means the bond interest rate is 1.5% greater than the economic interest rate. That's what I'm trying to talk about. This is what will now happen. These bonds are sold on premium. This is exactly what I'm trying to talk about. It's sold on premium. So their expenses, if because this is paying more, if I'm supposed to get it for 1.5, I might get it for 1.7. So we have about 0.2 added to it. So this is like a premium you are paying because of the long-term benefit of this 15%, 1.5% interest rate. And let me wipe my screen so I can explain my point further. So we saw it as cash premium. So we saw this as cash premium. Now, as a business owner, this is very, very important. I want you to know this as a business owner. Now, looking from the standpoint as an investor, you might not necessarily, which is very important that you should look at it because it might sound so boring and all of it, but it's very important because if you want to be in depth with your analysis or whatever you want to do, for instance, you're among the top shareholder in the company. There are some things you might not be cool with in the income statement. And the AGM, annual general meeting, you can highlight this point, explaining further, needing further explanation on what is happening in that segment in the cash flow statement. That's why it's very important. So cash premium, like, okay, why are we paying this amount in cash premium? About 3 point something billion. That's ridiculous. What are we doing? You want explanation, and they will explain to you. So repayment of debt, money is now going out of the business. This is now financing activities, quite different from operating activities. So repayment of debt, money is going out of the business. So that's why we have this here stated. Now, common stock issued. Common stock issued, money is coming to the business because it's like the business, we are selling our shares. This is our shares, for instance. We are selling it out to the public, and the public is paying us to get our shares. So while money is coming in, our ownership percentage is going out. That's exactly this, our ownership percentage is actually going out. So that's exactly what that aspect is talking about. Common stock issued, then common stock repurchased the other way around. We are buying back our shares from the public and we are giving them money because we are buying back our ownership. So money is actually going out. So that's very good for the business. It's telling you that business is very profitable, that it has a lot of money to repurchase and shares that has already been sold out. So that's very, very good thing to look at. Common stock cash dividend paid. Microsoft pays dividend, and the more we have cash from operations, it's a good sign to show that the business can operate itself and the business can pay its dividend. So you can see we had this year, we have this year, and Microsoft has actually been paying dividend in the past 2 years, and this dividend is actually increasing. That's phenomenal. That's good. You should look into Microsoft if you're interested in buying the shares. So 15,135,137, that's the figure of cash dividend paid out. The money actually went out. Then other nets, which is actually here, that's cash flow from financing activity. Finally, not bore you out with this stuff. Finally, we have cash flow from investing activity. CapEx, capital expenditure. So this is capital expenditure. They spend it. Probably they want to get new property. I want to get new data storage center, and all of it. That is capital expenditure. They spend about 15 billion for it, and this has been increasing always. But you should also look at, you don't, because the more the company spend is the more money is actually going out. This is what I mean. The less they invest, the more they spend, the more they invest, the more money is actually going out of the business. Now, the less, remember, this is actually great, they're investing. Now, the less they invest, the more they have money to spend in the business. But remember that this business will not become competitive. Microsoft is a competitive business. Releasing new operating system, please sorry for the noise in the background. Releasing new operating system annually, and not really annually, I mean frequently. This is science to meet with the present challenge of the world. It means a lot has been invested in intellectual property research and development, news asset, and all of it. So you have to make a balance while you're making investment decision using this decision, or this margin, or this metric, rather, as it may be. They want to invest, but it should be reflecting. So you can see that the more they're investing in doing great stuff, the more the income is actually increasing. So it's not actually Microsoft is doing something bad, but that's actually very, very necessary for Microsoft to thrive. Now, so they bought property, acquisition of companies. You understand me? Microsoft also bought other companies. You might not really hear them, but there are some competitors that they bought. Maybe some software companies, some gaming companies, and all of it they bought. And you can see that this figure has been on the increase. So Microsoft is really profitable, that it's actually buying other businesses. Purchases of investments. It can be shares investment. Sorry, that's wrong. Not shares investment. Purchase of investment can also be in form of real estate. Yes, can also be in form of um, rights. Can also be in form of patents. Those are investment also. So maturities of investment. You can also be buying shares of other companies. Yes, you can be buying shares of other companies. That's quite different from financing activity. The financing activity we're talking about here is in terms of um, payment of dividends, in terms of selling of his shares, buying of his shares. Those are the financing activity. Investing activity, capital expenditure, real estate, machineries, and all of it. Shares in other businesses. That's investment activities. So purchase of other investment. If they are purchasing other investment, it means money is going out for us to get those investments. So maturities of investment. So some investment we purchased are actually matured and they're actually producing this amount of figures, which is added into the business. So sales of investment. So we sold our car, for instance. We sold our beautiful car. This is our car. We sold this car out to the public. We're not interested in using the car anymore, or sold it for this amount. So it means money came into the business while we sold our part of our assets. Then we have other nets, which is actually other investment that they did that took away money from the business. Net cash used in investing activities. Then we also have a provision for currency fluctuation, because you have businesses that Microsoft have businesses in Europe, in Asia, in other parts of the world. I'm sure in Africa and in America. So we have different currency exchange rate that affects this value. So they made a provision for that. Now net cash and cash equivalents, 2,220,000,000. Sorry, not that. Net cash and cash equivalent is 2,220,000,000. Cash and cash equivalent at the beginning of the period. This is the beginning of the period. 11,356. This one we have here. So in 2021, this figure is what will appear here. Okay. So when you add the investing, financing, and the operations, what you get in balance is actually what we are talking about, the cash and cash equivalent, which is 13,576. 13,576. And basically this has actually been on the rise. It has increased, it has increased. So Microsoft, from only this little analysis, Microsoft is a good aspect of a business you should start looking into. I'm not saying you should go and buy it. If you want to buy it, you also do your due diligence before you make that decision. But to myself, it's a win-win for me, and I'm actually looking at this business to invest in it. That's actually the joy of investing in a business, because you're using Microsoft Word, possibly you're using Microsoft Office 365, and you're paying for all of it. You're like, wow, I'm also investing in my business because I own a share in this business also. So that's a way to look at it from an ownership mindset. Okay, guys, so I'm sure this video might sound boring to you because it's quite boring, but it's very important that you understand this aspect as a business owner, as an investor, and also for your simple personal financial analysis. This will help you. Cheers. See you next week. Bye for now.